Welcome to XM.com. You're watching today's Daily Market Comment by Mario Sajkiriakos. I'm Christina Marukos. Growth concerns returned to haunt global markets yesterday after the U.S. Consumer Confidence Index fell short of expectations, adding credence to the view that economic momentum is evaporating as the cost of living crisis bites. Recession watchers have been dealt a royal flush lately, with PMI business surveys warning of a remarkable drop in demand, hiring freezes and worker layoffs, retailers unable to unload inventory, consumer confidence tanking, and inflation expectations rolling over. Although the U.S. economy might avoid 2 consecutive quarters of negative growth and dodge a recession, there's no escaping a sharp slowdown. Accordingly, the terminal level for interest rates has been pushed significantly lower. Market participants are betting the Fed will get its wish. Inflation will be eradicated at the expense of the economy suffering. The major indices on Wall Street took some heavy damage yesterday, losing between 2% and 3%, with the tech-heavy Nasdaq leading the charge lower. Besides growth worries, portfolio rebalancing flows heading into quarter end, and the buyback blackout window, where companies refrain from buying their own stock in the weeks leading up to earnings announcements, might also be contributing to the turbulence. Crossing into the FX market, it was another case of the US dollar steamrolling everything in its path. The Swiss franc managed to outperform too and seems to be headed for another test of parity against the euro, turbocharged by global growth anxiety and expectations that the Swiss National Bank is determined to exit negative interest rates. Not every safe haven could shine, though. The Japanese yen and gold prices came under renewed selling interest. As for today, there are several events to keep investors entertained. The ball will get rolling with German CPI inflation numbers for June. We will also hear from 3 of the most important central bankers in the world, Fed Chairman Powell, European Central Bank President Lagarde, and Bank of England Governor Bailey at 1 o'clock GMT. Finally, OPEC will begin its 2-day meeting today. The trajectory for energy prices is arguably the most important variable for consumers, markets, and central banks alike at this stage, as it can impact both inflation and growth. However, expectations are low heading into this meeting amid reports that OPEC doesn't have meaningful spare capacity to boost production, even if it wanted to. Thank you for watching today's Daily Market Comment here at XM.com.